When I saw the S&P Dow Jones quietly teaming up with a crypto project, I had to do a double take. A Wall Street giant dipping its toes into blockchain. It sounded unbelievable, so I had to find out what on earth was going on. It turns out that the guardians of the stock market indices and making a pretty bold move on the blockchain stage. Now, in a development that almost no one saw coming, the S&P Dow Jones indices, yes, the very same company behind the famous S&P 500, is launching a new index, and it's doing it on a blockchain network. And it's not just any blockchain, is it? They're going to be using Avalanche with Chainlink providing the real-time data feeds to make it all work. So if you're a Chainlink holder like me, this is the kind of news that makes your day. But even if you're not, stick around here because by the end of this video, you're going to see why this surprising partnership could actually mark a turning point for crypto going mainstream, and what it might mean for all of us in the crypto community. Let's just back up for a second. What exactly did the S&P announce? Well, S&P Dow Jones indices and a fintech firm called Dinari actually have teamed up to create something called the S&P Digital Markets 50 Index, planned to launch by the end of 2025. Now, S&P launching a digital markets index might sound pretty straightforward, right? Maybe just another index tracking some crypto companies, right? Well, not quite. This index is the first of its kind to blend both traditional stocks and digital assets into one basket. So specifically here, they're actually combining 35 US listed companies, so think big firms involved in blockchain or technology innovation, with 15 major cryptocurrencies, all under a single index. So that is 50 components total, a mix of stocks and coins. It's kind of like someone put part of the stock market and part of the crypto market into a blender, and they poured out this new kind of smoothie. And I mean, in a kind of really good way, by the way. It kind of gives investors this unified exposure of both worlds under one structure. But here is where it gets really interesting. S&P isn't just calculating this index and calling it a day. No, they want to bring it on-chain. In other words, they plan to tokenize this index so that it can exist as a digital token on the Avalanche blockchain. Essentially, Dinari, their partner, will create a token that represents the index through its kind of D-shares platform, by the way. And each token will be backed one-to-one with real assets, the actual stocks in the index, held under custody. Each investor, or investors who buy, I should say, the index token, will even have the rights to stock, the same like that the stock owners actually have the same rights, right? Including any dividends from those stocks. And they can redeem their token in full value in the underlying assets. This isn't some made-up crypto magic either. It's real-world shares meeting the blockchain. And honestly, when I first read that, I kind of had to blink twice. It's kind of like seeing an old-school banker show up at a hacker meetup, right? The two worlds colliding in a way that you didn't expect to see this soon. Now, why do they need Chainlink in all of this? Well, blockchains like Avalanche, they can't inherently access real-world data all on their own. They are kind of like sealed vaults, in that sense, right? They need oracles to bring external data. Now, Chainlink is the leading oracle network, basically a service that feeds trustworthy data from outside of the world of blockchain and brings it into blockchain smart contracts. So in this particular case, S&P and Dinari, they chose Chainlink as their official oracle provider to deliver real-time pricing data for the index. Now that means that Chainlink is going to be polling in all of the prices of those 35 stocks and 15 cryptos and feeding them directly onto the Avalanche chain so that the index tokens value on-chain always matches the real market value. Now, they're not stopping at just price feeds either. The integration will use a whole bunch of Chainlink's smart data services, like the proof of reserves, the NAV data, and even something called SmartAUM. Now, I know that all of that sounds like a lot of fancy terms, but here is the simple rundown. Proof of reserves is a mechanism to verify that the assets backing a token are really there. So if Dinari actually says, we have all of the stock to back up the index token, well, a proof of reserves feed from Chainlink could actually allow anyone to confirm that on-chain, helping ensure that the index tokens are fully backed and not fractional mirage. And NAV data likely refers to net asset value data, right? Essentially calculating what the index is worth in real-time value based on its components. And SmartAUM, it might actually be about tracking assets under management or compliance rules automatically, right? The point is this: Chainlink isn't just tossing prices in and providing. It's actually tossing prices in and just leaving it as calling it a day. It's actually providing a full suite of data and trust features so that the index token runs with integrity and transparency. Now, S&P basically said, if we're going to do this, we're going to do it right. They even kind of plan to integrate things like an automated compliance engine later on. Presumably, they want to keep everything legally kosher and smoothly connected. Okay, so let's think about what all that means. Right, a heavyweight like S&P trusts decentralized oracles enough to use them for official financial data. Now, Gabe, the CEO of Dinari, actually summed this up quite well. He said, financial systems depend on trusted data and transparent infrastructure. And that working with S&P and Chainlink brings that same standard of reliability to those tokenized benchmarks, ensuring that the index operates with integrity on-chain. So, in plain English, they're just saying that they want the on-chain version of the index to be as trustworthy as the traditional one, and Chainlink is how they ensure that that happens. Meanwhile, an S&P executive, Cameron Drinkwater, actually called Chainlink's Oracle a crucial intermediary that ensures data integrity and connectivity for this index launch. They're not just crypto bros hyping up some meme coin here. These are executives from S&P Dow Jones indices speaking. And if that doesn't make you perk up as a crypto enthusiast, then I don't really know what will. It's basically an endorsement of blockchain technology by one of the most traditional financial brands that are out there. Now, I want to hit pause here for a second and address something very important that's always on my mind during news pieces like this. Now, this might just shock you, but I'm not a financial advisor and nothing in this video is financial advice. Cryptocurrencies are highly volatile and you could lose all of the money that you invest. You should always do your own research and consult a qualified professional. After all, your investments are entirely your responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses, and this video is for entertainment and educational purposes only. Alright, so with that reality check out of the way, let's dig deeper into why this move by the S&P and Chainlink really matters. For one, it reflects the broader industry shift towards tokenized assets. This is not just happening in isolation. In fact, just a day or two before this S&P news, we heard that the FTSE Russell, which is basically a company behind the FTSE 100 index in the UK, announced that it would also use Chainlink to put its market index data on the blockchain. So you have both S&P and FTSE, two of the biggest index providers in the world, embracing Chainlink's tech to bridge their data into the crypto world. Now that is a clear signal, isn't it? This is becoming a trend. This is not just a one-off experiment. Even the US Department of Commerce has worked with Chainlink to upload large sets of economic data onto blockchains. So when I see government agencies and century-old financial firms playing in our sandbox, well, I get a little bit excited and a little bit cautious all at the same time. I'm excited here because it validates what crypto innovators have been saying all along, that blockchain technology has real uses in traditional worlds. Cautious though, because, well, once the big players show up at the party, they tend to change the vibe, right? We have to make sure that the crypto ethos of transparency and decentralization stays intact as these collaborations unfold. And it's not just the index data or government reports getting tokenized here. Traditional stocks themselves are also being tokenized left and right. Back in June 2025, a fintech company called Backed Finance actually launched something that they call xStocks, essentially tokenized versions of real company shares. For example, you could buy a token that tracks the price of Tesla stock or Apple stock, and those tokens live on the blockchain, right? They are fully backed by actual stock and mirror its price. Sounds familiar, right? It's a lot like what S&P is doing here with the entire index, just on an individual stock level. Even Robinhood has jumped on this trend. They rolled out a service for users in Europe to trade tokenized stocks too. So, what they're actually seeing is a convergence here. The line between the stock market and the crypto market is starting to blur. It's like watching two huge rivals merge into one, right? The flow of traditional finance and the flow of blockchain technology meeting together. A report by BCG, Boston Consulting Group, even estimated that tokenized assets could reach $16 trillion by 2030, roughly 10% of global GDP. That's a mind-boggling number, right? And while most of it's just a prediction, it shows the scale of what people think is coming to this space. If even a fraction of that comes true, we're talking about a massive shift in how assets are issued and traded over the next decade. Now, let me bring all this back to a more personal perspective for just a moment. Now, all this talk of big institutions integrating with blockchain, it got me reflecting on my own crypto journey and the ways that I'm exploring to stay ahead. Now, many of you know that I'm always on the lookout for new opportunities in the crypto world, whether it's a novel project, a passive income idea, or just tools to make life easier for us crypto investors. Now, one thing that I have been experimenting with lately is something called Unity Nodes. Now, I've mentioned this in previous videos, so it might ring a bell with you guys. Essentially, Unity Nodes is a project that was formed by World Mobile and Minutes Network. It's kind of their baby, if you will. And the project where you can run on your smartphones or tablets to support the telecoms industry. Well, whatever kind of network tasks they want, which is basically little verification calls to test the telecoms grid. And in return for doing that work, you actually do earn crypto rewards. Right? Now, I did go ahead and buy a Unity Master Node NFT, which came with 200 licenses. Now, that's basically allows me to have 200 devices hooked up to the network. Now, I'm not going crazy, firing up 200 phones all at once in my house. That's crazy, right? And you don't really want to have that many devices in one location. Best results will be when you spread them across different locations, geographically speaking. Now, I'm going to start small here anyway with 10 phones just to see how it all goes. If it's successful and works as advertised, I'm going to scale it up gradually. And what's neat here is that you can actually get paid out in different cryptocurrencies, not some new unknown token. The rewards can be paid out in different things like Bitcoin, Ethereum, ADA, XRP for one, right? And I'm going to choose XRP, right? Why? Because these are my favorite assets that I want to be stacking up passively on the side, right? Stack more of the ones that I believe in. And if this Unity node experiment pans out, it's going to be relatively profitable. Anyway, this is just something that I'm personally trying out. I'm not telling you to go out and do it. You should probably just do your own research as always. I'm going to leave some links in the description down below to Unity's light paper and their rewards calculator so you can read up on all the details and do the calculations for yourself if you are curious. The concept of Unity, though, shouldn't be new to a lot of you since I've talked about it many times before. But basically, it's just a way of making everyday tech, like phones, to basically make more money for you in the crypto world on the side, just by doing and helping out the telecoms industry. In fact, I was so intrigued by Unity and their model that I did actually go ahead and buy a second and third Unity nodes to basically lease these licenses out to the community members who are interested, because I am aware and I do appreciate that not everyone wants to have the hassle of dealing with 200 phones for themselves. And they don't have 200 phones just lying around. I get it, right? So what I'm going to do is I'm going to lease things out. And this way, if you are interested in Unity, but don't want the hassle of dealing with all that hassle of 200 phones, well, you could just lease a license from me and still participate on a much smaller scale. Let's say you want 10, 5, whatever, right? You can just lease them and you can basically participate that way. Right, we're going to have more details about all of this in our Discord server, which is linked in the description below. And of course, our Discord is free. By the way, if you haven't joined the free educational Discord, you should definitely check it out. It's one of the best places to continue these conversations, share the research, and learn from each other. I do love how our community is always digging into the latest projects and news, just like we're doing here. Now, let's zoom back out to the much bigger picture, because you might be wondering, why are these big players like the S&P and the FTSE jumping into blockchain right now? What has changed? Well, I think part of the answer is that blockchain technology has matured a lot in the recent years. Projects like Chainlink have proven that they can deliver reliable data feeds without getting hacked or going down every other week. Smart contracts are even more robust. Regulatory clarity, while still not perfect, is better than it was a few years ago, in many regions anyway. And importantly, there is demand. Investors, especially younger ones, are interested in cryptocurrencies. S&P Global actually has had crypto indices for a while, like they have index on the top cryptocurrencies by market cap, right? Now, those were just numbers on a screen. By tokenizing an index, though, they're actually creating something that people can actively invest in and trade on chain. And that is a big leap from just publishing an index value. It suggests that the S&P sees a market for this. People want, at least who want a foot in both worlds, traditional and crypto, they want it in a single product. Another reason is probably efficiency and accessibility. Because if you tokenize an index and you put it on the blockchain, suddenly you remove a lot of the friction, right? Trading that index token could be 24/7. It could be global, with potentially lower fees than going through a brokerage account for an index fund. Now, it can also be fractionalized, right? Someone can buy, I don't know, say $10 worth of the index token, whereas normally index funds might actually have a higher minimum or require a brokerage account. We might see, even see things like using that token as a collateral in a DeFi application or integrating it into crypto wallets alongside other assets. It basically opens the door for traditional assets to plug into the crypto ecosystem more seamlessly. Now, of course, it raises questions too. Are there risks? Sure are, right? If you're holding a tokenized index, then you're going to have to trust that the custodians really hold those tokens. Hence, the proof of reserves is so important. There's smart contract risk too. Regulatory risks. Governments could decide that they don't like tokenized securities if you get too popular outside of their own control. And what about the composition of that index? 15 cryptos and 35 stocks. How volatile is that combination going to be? It might swing in ways that traditional indices don't, which, could actually be a thrill or a nightmare depending on the risk appetite. So, excited as I am, I do remain level-headed, and that this is an experiment, a promising one, but still an early experiment in merging two very different markets. One thing that I always say and try to remind myself in times of hype like this is to stay informed and to stay prepared. The crypto world can change overnight, right? An exchange might suddenly halt withdrawals, or a token could skyrocket then crash. That's why I personally follow a strategy of keeping multiple accounts, at least backup plans, right? So even with something as simple as where I trade. For instance, I have accounts on several different exchanges that I trust. I've gone through KYC, even tested the processes of withdrawing and depositing on each of them, so that if one exchange goes down, I maybe even has an issue, I can just switch over to another one. Now, some of those ones that I use regularly are, Binance, Coinbase, Kraken, amongst some smaller names like Blowfin and BitGet, which I use a lot for my trading. And full disclosure, right, I have a link in the description down below to my website where I list all of the exchanges that I do personally use, and the links to those exchanges are affiliate links, which means that if you do use those links, it doesn't cost you anything extra, but it does support the channel here at no extra cost to yourselves. So if you do go over to the website and see the exchanges that I use and sign up with them, well, a big thank you to you guys because I really do appreciate it. Anyway, the key idea though is whether you use my links or not, consider having a plan A, a plan B, and a plan C in this crypto space, because as we've learned, anything can happen. Being prepared is the name of the game. Whether you're dealing with cutting edge index tokens or doing some routine trading. Now, as we kind of come to the end of this story, let's reflect for just a moment on how far we have come. Right? If you had told me a few years ago that the S&P Dow Jones would be launching a blockchain-based index, and that it would be sitting here talking about running smartphone nodes to earn some crypto on the side, I probably would have laughed it all off as a bit of science fiction. Yet here we are. Traditional finance and crypto are not adversaries anymore. They actually are, like they used to be anyway, they can actually be working together. They're slowly becoming partners, if you will. It's not a fairy tale partnership just yet, right? There are still going to be some hurdles, some misunderstandings, and probably some failed experiments along the way. But the direction here is quite clear. Integration. Crypto is no longer a fringe Wild West ignored by the suits and ties. It's actually something that they're actively engaging with, whether by necessity or by opportunity. For those of us holding Chainlink, or Link tokens as we would call it, this news is a little bit of validation and vindication, isn't it? Because Chainlink was always touted as the bridge between blockchains and the real world, and here it is, performing that exact role at the highest levels. It's kind of like watching a rookie player that you invested in make it to the big leagues. It doesn't mean that the season has been won, of course, but it is a proud moment nonetheless. And if you're not in Chainlink specifically, it still matters because it shows big institutions finding real value in crypto's technology. That could, eventually spill over into the broader adoption and maybe even more investments flowing into the crypto space in general. My personal takeaway from all of this is to keep an open mind and keep learning. Now, I'm going to continue following this S&P Digital Markets 50 index story as it launches and seeing how it performs. I'm curious how the market will react. Will people actually buy these tokens? Will it trade at the correct value? Will we see copycats if it succeeds? These are open questions. Now, I'm also going to be keep tinkering with things like Unity and other projects at the grassroots levels too. Right? Because innovation isn't just top down from giants like S&P, no. It's also bottom up from the crypto community itself. And hey, maybe one day those two will meet in the middle. At the end of the day, catching myself, I do hate that phrase of course, but you know what I mean, right? What we're witnessing here is history in the making in the crypto world. Now, it doesn't always look flashy or monumental at the time. Sometimes it's just an index on a blockchain, or a smartphone network, or a quiet partnership announcement. But these are the bricks being laid for the future of finance and the technology. And being here, paying attention, learning, and participating, well, that is how we make sure that we're not left behind when the building is finally finished. So, if this journey through the cutting edge of crypto and finance got you thinking, then don't forget to hit that like button and the subscribe button and join me as we explore more of this wild intersections of traditional markets and crypto innovation. There are plenty more to come, so I'll see you all in the next one.